Hello friends, and welcome back to the Let's Trade. Market did exactly the opposite of what I anticipated in the last video, and I'm not one bit mad about it. We made a couple of plays, and Robinhood is being pretty slow and laggy, and it's kind of bothering me, so I'm going to switch over to the ledger, and I'll see you there. Alright, we're here at the ledger, and the first thing you'll notice is that we closed out this option. And the reason we did that is because this was supposed to profit off of a downward movement in the market, but the market went up, so we exited. I was able to get out in time for essentially what I entered at, because I saw in the pre-market that a lot of stocks were up some value, which meant that it was going to be a somewhat positive day. And also, given that we only had 1 week left on this option before it expired worthless, I figured now was probably the best time to exit, as there's a very low likelihood that the market would move down enough to make this profitable by the end of this week. So our first maneuver of the day was a call on SVXY. This is an attempt to profit off of an increase in confidence. I'm predicting that this strong Monday will give investors confidence for the remainder of this week, and hopefully we'll be able to profit off of that. This does have time, I think 3 weeks total, so even if it doesn't work out this week, we'll be able to hold on to that. Our next move is a put option on SPXS, hoping that this strong Monday leads to a rally for the remainder of this week, which would drive the value of this asset down and thus make my put gain value. And this is the same idea as this one, same indicators and everything, just another way to capture on this sentiment. So finally we have this play here on SPY. SPY basically just tracks movements in the broader market. You'll notice this negative entry cost. That's what we call a credit. So I receive money to enter this play upon hoping that this asset expires worthless, and so my exit cost would be 0, and thus I get to keep my money. We can talk about that in more detail later, but for right now, just know that SPY has to end above, I believe, $303 in order for me to keep this money, which I see as very likely, given the lack of news catalysts this week, and also given that this is a very short-term investment, only 2 days until this expires. So I see this as a very high probability trade. So we're here at the watch list. I'm very briefly going to cover what led me to make the decisions I made today, in addition to what we're looking for tomorrow. So one thing that gave me confidence today was this morning I read an article describing an increase in the NYSE advanced decline line. And what this is, it's an indicator that measures the number of stocks that increased in value minus the number that decreased. And so if this is increasing, that means more stocks are beginning to gain value. And so what that tells us is that the recovery is starting to spread to other sectors. It was initially just driven by tech companies, but now everything is starting to recover. And so what that means for us is we're going to try to find some laggers, some stocks that are lagging behind the overall market and still have a lot of room to grow. And lastly, we're going to watch for a breakout. I'll get to that in a second, but otherwise we'll have to recalibrate, come up with some new ideas. So here we are in Thinkorswim. We're going to take a look at this chart for SPY and kind of make sense of those principles I just explained. And so basically we see we were totally sideways last week. Hardly any change in the price. And this was amidst a lot of bearish sentiment, which means there's a lot of news that typically would drive the market down. And I think that highlights the fact that the breadth of the recovery was increasing, as a lot of the smaller stocks, or smaller market cap stocks, were increasing, helping to keep the overall market up here despite all of that news. And of course we saw that sell-off on Friday, but we also saw this increase today. that is kind of running contrary to what we expected. And so this tells me that the market is probably going to make some sort of recovery, at least back to the level it was here, maybe even higher. And so I see a fair amount of room for growth. And that's what led me to make those plays today. Alright, we're here in Robinhood, taking a look at SPY's chart for the past week to illustrate what I mean by a breakout. So last week, SPY was trading at about 312 for most of the entire week, a little bit of up and down, but right around 312. And then on Friday, took a steep nosedive, as we've discussed, and today has since recovered all the way back to 312. So what I mean by a breakout is if tomorrow we see this go above about 314 or 315, then the stock could potentially continue going up all the way until another point, probably around $320, which would be very good for us. But if instead it fails to break out past that point and comes back down to 312, we'll have to reevaluate our strategy. Alright folks, that's about it for this episode. Very strong day. Hopefully we'll see a continuation tomorrow. As always, my referral link's in the description if you want to open your own Robinhood account. And thanks for watching. Hope you enjoyed. See you in the next one.